Hello, my fellow investors, and welcome back to another stock analysis video. Guys, we're going to now cover the company Verizon. This is all on the live stream, and yeah, this is now the third company in the world that we're doing. Let's get started with this. Now, this company is one that I own. Full disclosure, I own this one. I did own also as well Microsoft and Google, but you know, this is by far my biggest holding thus far, and I'm down on them. They're actually my worst performer overall. And let's take a look at these fundamentals, take a look at the earnings report, and see if the current share price is looking like a buy, and then take a look at the technical analysis. Let's go through this one rather quickly. Now, we got over here the fact that their earnings actually came out post-market. Not post-market, sorry, pre-market. And we can see that their EPS normalized actual came in at $1.20. Beat by 1 penny. EPS gap actual $1.17. Missed by 1 penny. Revenue of $33 billion, which was a miss by $720.36 million. Okay, interesting. Now, looking at the actual earnings release, guys, this one is interesting. This one's interesting. We got over here. I actually saw this as 6G is coming next. You know, Tony, 5G was told to be like the big thing. Like, I don't know about Mike, but like, do you remember that commercial of like, there's going to be people in California, and then there's going to be like a doctor in like Maine, and then they're going to be able to do a surgery from Maine in California because this is going to be that fast. I don't know if you remember.
I never saw that commercial, but you know, it's always they always prop up like, "Hey, it's next new best thing," and it's like they show some craziness of it.
It always. That's why I'm just like this AI thing with Microsoft and Google. I'm just like I think it's just they're hyping it up. It's not gonna be that big of a deal. It really isn't. So, I agree. 6G is coming next, but honestly, did you really feel the effects of 5G? Because I didn't. But something I did notice when I did see Verizon put out the earnings was Verizon begins 2023 with rapid network expansion and the most broadband additions in over a decade. So they're bringing in a lot more people. Which is again surprising because people thought that they were actually going on a decline, but apparently not. Company's total wireless postpaid phones gross additions increased 5.3% year over year. Cash flows from operations, y'all know it. I love it when companies mention cash flows, right? Smack dead middle of their, like, front and center, smack the middle of their earnings. Cash flow from operations increased $1.5 billion year over year, and free cash flow increased $1.3 billion year over year. Really good. We got the consolidated highlights for Q1. $1.17 EPS, we read this, with $1.09 in the first quarter of 2022. So we can see that was a pretty big increase right there. Excluding the special items, $1.20 compared to $1.35 in first quarter 2022. Total operating revenue, $33 billion, a decrease of 1.9% for the first quarter. So look at this. The first quarter of 2022 was actually higher in revenue than the first quarter of 2023. And it was decreased by 1.9%, so around 2%. Net income of $5 billion, an increase of 6.5% as opposed to the first quarter. So the revenue fell, but the net income grew by 6.5%. That's a little bit kind of weird. Now, this is what's getting people really excited when it comes to Verizon. Total broadband net additions of 437,000 was the largest result in more than a decade, reflecting a strong demand for fixed wireless and Fios products. Wow, that's very, very surprising. Yeah. This result included 393 fixed wireless net additions, an increase from 379 fixed wireless net additions in the fourth quarter of 2022. 6,000 Fios internet net additions, an increase of 60,000 Fios internet net additions in the first quarter of 2022. So all that's looking really, really good. Total wireless service revenue of $18.9 billion, a 3% increase. Postpaid phones net losses of 127,000, and retail postpaid net additions of 633. So total retail postpaid churn of 1.15% and retail postpaid phone churn of 0.9%. So this is looking interesting to say the least, if I do say so myself. I want to see their, don't tell me that this is somewhere else. Their charts are somewhere else.
They bought shares back.
Did they buy shares back? Doubt it.
Are you trying to say? Oh,
no, what I was wanting to do what I wanted to do was I wanted to take a look at their table, but unfortunately it's in the other press releases. Their press releases are different. They give this out, like the highlights, and then they give out like the table somewhere else and the table somewhere else. So it is what it is. Nonetheless, so I mean, you got an increase, of $1.3 billion year over year. So I mean, we kind of already understand that a little bit. I mean, we could look up the share repurchases, which there are none. So it is what it is. All right. Let's come now into the calculator, because this company is one that I hold, and I really would like it to go up, because right now I'm down a whole lot. So yeah. All right. Let's see. Ticker symbol VZ, market cap of $157 billion, a P of 7.38, really, really tiny, with a current share price of $37.30. Looking at this, guys, on the 1 year, they're down 25.82%. Year to date, 7.03. Intraday, they didn't do too bad. 0.5% up, and then post market, 0.2% up. So it's they had earnings pre-market, so they did, I guess, go up during the intraday, and they continue to go up. But to be fair, though, looking at this 52-week range, it is $32.79 to $52.18. Now, the issue with Verizon is that, well, for me personally, I unfortunately bought this thing at a price tag of around like $55. So I'm down on it a lot. But they're still paying me a pretty hefty dividend of like close to $300 every quarter. So it is what it is, though. Nonetheless, yeah, I'm fairly down when it comes to this company. This is my worst performer. Now, they do pay out the dividend, as I said, of $2.61, which is a yield of 7%. Absolutely crazy. And I also just remembered that we didn't take a look at the amount of dividends paid, but oh well, we'll take a look at it for this one. This company has a dividend yield of 7.04%, a payout ratio of 50% on the dot, and only a 5-year CAGR of 2.04 with 18 consecutive years of dividend payment. Payout date, ex-dividend date was April 6th. Payout date will be on the 1st of May, and they pay their dividends quarterly. Now, based off the current shares outstanding and this $2.61, this means that they pay out almost $11 billion in dividends every single year. And after this is paid, in their 5-year average free cash flow, they still have $7.5 billion left, and as of their last year's free cash flow, it is $3.1 billion. The fact that this is lower than the average tells me that their free cash flow is going down. These payout ratios are 78% for the last year's free cash flow and 59.34% for the 5-year average. So teeter-tottering. This one I don't like. This one I do like. So it is what it is. Now, let's jump into their fundamentals. Net income. 5 years ago of $15.5 billion to 1 year ago of $21.3 billion. Increase of 37%. Give me a grade. Mike.
Sorry, I was on mute. 85.
Okay. How much?
85.
85%. Yeah, I would agree with you on that one. We got the free cash flow. This one is decreasing. This one's bad. We got 5 years ago of $17.7 billion to 1 year ago of $14 billion. Decrease of 21% with an average of $18.5 billion. Grade?
I was going to say 10 to 20.
10 to 20%?
Yep.
Yeah, honestly, yeah. It's on the decline, and this drop just happened 1 year ago. It's very concerning, so I would give it 20% as well. Revenue, we got $131 billion to 1 year ago of $137 billion. Increase of a little bit less than 4.6%. A little dip here 3 years ago. Thoughts?
75, because it's not really increasing significantly, but it's still increasing.
And the one dip was because of COVID.
So, yeah, makes
75.
sense.
Yeah, 75. I dig it. Okay, and assets minus liabilities. Now, you're looking at this graph and you're like, my God, that's looking absolutely incredible, right? Consistently increasing. Yep. Perfect. Except, average total assets, it is $347 billion. Liabilities, $266.8 billion. Massive.
But like you said, that's for that sector. It's like that.
Pretty much. I don't remember, though, what T-Mobile has. That's the one problem. I don't remember. I know AT&T has more than this. I don't know T-Mobile, though, so I'm not sure. But, yeah, this is a difference of $80 billion in the positive. Grade?
I would say 90.
So we'll say 90? All right. All right, cash flow minus the liabilities. Well, we can see this is consistently decreasing. Not 1 year did they increase it a little bit. And as of 1 year ago, we can see that they are lower than the average of negative $233 billion.
Is 0 an acceptable grade?
Yes, it is. Yes, it 100% is. We could give it a 0. Shares outstanding, we could see that they are increasing it very, very slightly, though. And yeah, I mean, it's a very consistent increase, though, from what I could see. Yeah, we got 4.13 billion shares to 4.2 billion shares. That is an increase of 1.64% on the 5-year, and a tiny increase. You can see that they've pretty much been increasing at around 0.05% in the past 5 years, so, or at least every year within the past 5 years. So would you give this a grade? It's consistently increasing.
I was gonna say like 50, just because it's not horrible, but it's like I don't like the increase.
Yeah, I would have said like a 55, but I'll take 50. And lastly, when it comes to cash and equivalents, this almost looks like a middle finger. Currently, they hold $2.61 billion with an average of $6 billion. Now, these grades: net income 85%, free cash flow 20%, revenue 75%, asset minus liabilities 90%, cash flow minus liabilities 0, and the shares thing at 50, overall grade of 54. So it's not passing. They have a lot of problems, specifically with the liabilities and their free cash flow. Their free cash flow is decreasing, and we're seeing this. They can barely even pay out. Well, I mean, the fact that with that dividend being that high, 7% is absolutely massive. So it is what it is. 54%. I hope that they continue to just increase their free cash flow. They desperately need to fix that free cash flow. But let's see what's currently happening when it comes to this price, because, well, this is an interesting company. It has fallen a significant amount. And, well, we can see that price, the current price is $37.30. We got over here the revenues. We got over here the target share prices. And not just for anything, we got $23. Now, the reason why this is in the negatives, it's because they have a lot more debt than do cash on hand. So, you know, it is what it is. Let's put in some revenues. We got the revenue growth at 1.32. Okay. And so far on the year, if I could find them, fortunately I grabbed the wrong one. I didn't grab both of them. Let me see if I can find this on the year. The total revenue. Oh man. Right over here, it actually decreased. Total operating revenue decrease 1.9%. So you got one is a decrease from 2022 first quarter to 2023 first quarter of almost 2%. But Seeking Alpha is telling me that it'll increase. The forwards is estimated at 1.32. So what you got for me?
-2, 0, and 2.
-2, 0, and 2. All right. And for the projected share buyback.
So let's say they issue 0.5%.
Okay, 0.5.
And then 0, and then 0.5 buyback.
0.5,
give it an
0, and 0.5% of buyback. All right, and that's not 1%. That's 0.5. That's mainly because of the thing. So let me just fix that right now. There we go. Okay, so with that, guys, and the required rate of return of 10%, we got $21.27 to $24.80. The current share price is 37 cents. So I'm scared because this thing needs to fall even more, and I'm probably gonna lose more of my money then. Well, hypothetically, obviously, but yeah, very, very interesting, right? Yeah. Obviously, this will change based off of the numbers that you put. Have these calculators, guys. Read the earnings report. Link is in the description below, like always, and make your own assumptions. So, yeah, let's actually go into now, which I forgot to do for the other two videos, but I guess the other Google didn't have one, and Microsoft was really low. Verizon, though, putting in $5,725. This nets us $400 in dividends every single year. But remember, payout ratios are 78 for the last year's free cash flow and barely 60 for the 5-year average. So this may not be safe. They may actually cut this just like AT&T did. So be very, very careful when it comes to this dividend. So it's pretty much all I got to say with that. Mike, you want to take it away with the technical analysis?
It actually, you know, you always call it voodoo magic, and maybe the voodoo magic is going to give you some hope. So looking at the chart, you actually have a lot of bullish signs on it. And what do I mean by bullish signs? Now, one, you gapped down on earnings and pushed up. You actually closed green on the day, 0.5% only. However, you did close green. So investors were stepping up to buy the company. And on the daily, the lowest, in my opinion, this company goes to $35 region, just because it really has a lot of support in this region, previous area that hasn't come back since the October lows of the previous year. You have a gap to the upside. So once this stock trades above $37.79, it has easy, smooth sailing all the way to $38.51. MACD is starting to show weakness to the downside and starting to curl back up. So you definitely have potential to go upwards. RSI is it bottomed, in my opinion, on the oversold side, and now it's starting to curl back up. So price action is starting to show life again. It's showing to show value. And also remember, people are going to start rotating out of maybe tech and rotating into things that are undervalued. And telecommunications also in a downturn, you know, I keep going back to FRC when we talk about this, just because if that domino does fall, keyword if, and most likely when it does fall, telecommunications is a sector that a lot of people rotate into. So seeing that it's undervalued, it has definitely the potential to go to the upside. This gap fill is definitely something I'd be looking. If you want to play the short term or the swing trade type thing, I would definitely look at possibly buying once you cross $37.67 and then running it up to $38.57. That'd be my short swing trade opportunity. If you're into that stuff or want to maybe get into it, that'd be an interesting point to possibly take a look at. But remember, do your own due diligence. So you have the potential to the upside. You are making now a higher low technically here because you're forming a bottom, but you know, it needs to be confirmed with further price action. And on the weekly, if we jump over to it, you could be forming a head and shoulders on it, but you really are having traded below the neckline. So you have left shoulder, head, right shoulder. So there's the bearishness, which would take you probably down to the $30 level, or about most likely 32, 33, but it's not really going to take you down further. MACD is really squeezing together on that weekly. Let me zoom in for you guys so you can clearly see it is really trying to pinch together to cross back to that bullish side, and it's very close to the zero line. So there's hidden bearishness on the chart, but it is also some bullishness as well that you have to pay attention to. You don't want to just be one-sided on something. On top of the monthly, this is where it gets real interesting. That MACD is pinching together nearly, and it definitely has the potential to go to the upside. And if you see telecommunications being bullish, it's pretty much bearish for the market, which could indicate a lot of things for the market, and especially having the monthly zone sitting here at $33.86. I definitely be looking to buy that company there, because you had 23% of the transacted volume on the monthly there, and then if you ever come down to $26, that would be like a steal of epic proportions, just because you're going to break through a key zone, which you should bounce here, and you're going to be coming down, forming a massive divergence, most likely on the MACD, and basically coming down to an area where nearly 31% of the volume historically has transacted. So it's just, there's a lot of key setups there. But going back to the daily, as I can make this as simple as humanly possible. Weekly is not looking bearish, monthly is looking bullish, and the daily has more upside, even with crappy earnings. Like, crappy in the sense they missed. Yes, they missed, but investors are still maybe seeing value in the company. They're seeing maybe it's not as bad as they were expecting. So definitely could see that upside potential. And where could we go? So once you get up into this price area, the $39.26 would definitely be a trim, but I could easily see this riding up all the way to $41.53, especially if you have a sector rotation occur, which could happen in the next couple weeks or months. You just have to be careful of these things. They usually happen where one sector rotates to the next, so I definitely be looking for that upside potential. And just overall, I'm looking very bullish on the company. I definitely see it has a interesting pattern on the daily, and I see the potential for the upside. If I were to place a trade on this, I'd be looking more bullish than bearish, just because it's showing more potential to the upside. I have a higher risk to reward to the downside, because my risk to reward to the downside is, let's say downside from current share price, let's say is 6%. My upside is nearly 11%. So doubling my, it's a 2-to-1 ratio. That's a trade I'll take any day of the week, just because it's a 2-to-1. I don't want to play 1-to-1 trades. I like 2-to-1. And I'm seeing a lot of bullishness that I don't trade this sector a lot, but just looking from a plain technical standpoint, I see the bullishness across multiple timeframes. Whenever I see that, those trades usually work out in my favor. So with that, guys, we're going to conclude VZ or Verizon for the technical analysis, and we're just going to jump over to the next company now.
All right, awesome. So that was interesting to say the least. And you know, I really do hope you're right, because I'm down on this company a whole lot. So you know, they're still paying me a pretty good dividend regardless. All right, guys. So I think that'll pretty much do it for the Verizon video. Like to feel like, comment, subscribe. It really does help her with the algorithm on YouTube. You guys can follow us on the YouTube sites. Link is in the description below. So with that said, peace out, and we'll see you all next time.